Hi, this is Kim Watson. In this video I'm going to be looking at entering trades. Now, anyone can enter a trade, but doing so at the right moment is the skill. And I'm going to share some of that skill or those skills with you and some of the ideas I have in terms of entering trades. Now, this fits in well with my morning outlooks because quite often in the morning I'll say if it does this, I'm looking to buy. So for example, we've seen this market here, this is oil. I might have said if it pulls back to its daily pivot, that's my preference. I'm wanting a retrace, I want some discount, I'll be looking to buy. Now then it's the case of, do I buy straight away or do I wait? And as I said, anyone can enter a trade. Now often there's a better description of this: any fool can enter a trade. To be fair, anyone can enter a trade and make it profitable if they don't use stops, potentially if they're waiting to be right at some stage. But my trading isn't like that. I manage my risk really tightly. So when I'm seeing something like this coming back, and this might be the case, I'm looking for it to come back to the pivot. Do I buy at this point? No, is the answer. I'm waiting for a bit of confirmation that this support is actually working, because otherwise, just as it came back to the support here, and a nice 50 moving average just a little bit below it, so it came back to these supports. But if I'd bought it at this point here, well, I'd have been stopped out of this. So I'm just waiting for it. But there was no reversals there. There was no little tricky trade. It didn't just do a little move, get me in and turn around. It was a full-blown retrace, and a decent one at that. This one didn't actually. There's another option here where it pulled back into its, but it came short. I want to be in it. I'm wanting it to touch the pivot and find the support that it needs to do. If it's quite short, often I've just missed the trades. That's the way it goes. I have strict rules. So even my discretionary trading has strict rules. Okay, I've just clicked this on a little bit too far, but you can see what it's done here. The very next bar, now I'm looking at an hourly time frame here, so I'm looking at this through an hourly time frame. So the entry would be a couple of pips above the point that I've got a reversal. So I've got a reversal bar coming in. It's given me the guidance that this market could actually be finding support off the level I was hoping it would come back for. So it's come back for that, so I'm actually looking then at the potential entry. Now the entry would be a couple of pips above that for me. That's how I trade it, but I've got a point of support. So to me that's the point of skill, in terms of just giving it a bit of time, allowing the market to show you yes, it's potentially going up there. And as I say, a couple of pips above. Why a couple of pips? Well, so it doesn't just give me a side-by-side bar and roll over. It actually gives me something that's within the right direction. This way you can have quite a measured stop, because you place the stop relatively close to the low of the bar that's got the support. You don't need to have it miles and miles away. You may choose to if you're looking to make this a bigger swing, and you might identify other points of where you want to place a stop rather. But it's given me the opportunity to see that I could be right. Not that I am right or will be right, I could be right, and that's really what I'm looking for, that little bit of conservatism in there to show me the principle that this is given support is potentially going to work. So I've got into the trade. That's the method I use. So it's a simple. If you hear me say if it comes back to the pivot, I will then look. I'm really looking for something like this. So now this is quite a nice example because the reversal bar there isn't particularly big. In fact, if you ignore the wicks to it, you'd say it is a bullish harami, so it's giving you a sort of the two bars one by the other. So you would say, well, that's a really good setup. It's also hit the 50 EMA, so we've got some confluence with the overall setup there. But that is the setup. That gives me the buy point, and that's what I'm looking for in those types of trades. Now, there's another method, another method of entering trades that I want to show you, and it really sits around flags. So I often talk about a flag. Now a flag is where the market's pushed up there and it's pulled back, so we've got one of these retracements. They're not always bang into a pivot or moving average, but I do like to find some support for this point here. Now if the retrace is literally gone up there and basically the price action has been quite clean and come straight off, I'm quite happy then to, again, just like I would have here, looked just for a reversal bar to see that it's on its way, and then again a couple of pips above this, I'm looking for the long side. And if this is telling me right, it's the turning point. It's got to be in a big trend. I'm looking for this. I'm trend following here. Now if we get the flag that pulls up, comes down a little bit, goes up and then pulls back here, now arguably it's still a flag. Depending on what time frames you're looking at, you could say, well, it's giving you a lower high, and that's quite the point. It has given me a lower high. Do I just then get in at this point on another bit of support here, similar to what I've done here or would have done here? The answer is no. In this particular case, I'm looking for the break of the trend then, because this has given me a lower high. Ideally I'd like to see a higher low coming through there potentially, but it's not necessary. It depends on the type of the market. But what I'm looking at here is it started moving, it started breaking back up there. So instead of taking this more aggressive entry here, which could fail, I mean, we could just say this could just roll over. The markets could always just continue rolling over, but we want to give ourselves the best opportunity. So if I get in at a point up here on the break of the trend line, then to me it's given me just that little bit more conservatism. Again, I've got a known stop risk element, and it's quite straightforward, because if it starts breaking below this low here after I've taken it here, well then it's giving me another lower high, and the market could be in for a bigger move to the downside. So this is just a bit of a warning shot that it could be slowing down here. These nice flags that sort of come in, and the bars are quite side by side and all nice and neat, and you get the reversal into a lovely bit of support. Brilliant, love these the best. This slightly not so good, but I grade things like this. This is slightly better grading. This is a bit of patience. So I need to get a more confirmed entry. It needs to be breaking above this trend line, and when I say breaking above, I like to see it close just above it, and then we can take the next move that's pushing on in the direction I want to. Sometimes it might just close above it and then the following bar just carries on and down you go, and it hasn't broken the top of it. So it's a case of being patient. As I say, any fool can take the trade, but knowing to trade at the right moment is much more of a skill. There you go, I'll leave it there. Let me know your ideas. By the way, I have many different ways of entering trades, but I just wanted to show you a more conservative approach maybe, but some ideas how you might trade some common patterns. I have lots of other patterns that I look at, and I have entries, specific entry rules that I'll enter. I can carry on and give some more of these if you so wish. Okay, we'll leave you there. Have a good day. Bye for now.